Hi there. Today we are going to spend the next hour or so talking about how to buy cryptocurrency, how to transfer it from one place to the next, and get into just the basics of some technical trading strategies. Um, so, with that in mind, we're just going to start off here at the crypto minded exchange collection. And as you can see, there are a bunch of different exchanges here, kind of sorted by upvotes. So this is what people are interested in. And what an exchange is it's somewhat similar to, I don't know, let's say a Charles Schwab trading app, um, or any other brokerage service that allows you to trade one asset for another. In this case, they're all a little bit different. The one thing they're all going to have in common is the ability to trade the main cryptocurrencies that you've probably heard of, such as Bitcoin or Ether. But what might differ between these is what else you can do. So some of them are going to offer the ability to trade US dollars or euros for cryptocurrency. Some of them aren't. Some of them are going to have a lot deeper list of altcoins and distributed apps and tokens that you can buy that you can trade Ether for. So if that doesn't make sense yet, that's okay. We're going to kind of get into that and slowly go over all of these different items and go through it pretty in depth. So first, let's just talk about how to choose an exchange. So we know they're all different. So let's talk about the first thing, which is reputation, right? All of these are a little bit Wild West. I mean, cryptocurrency is not, backed up by a government. It's just a bunch of people, out there doing this, and that's what makes it very exciting. That's what makes it interesting, but it also makes it a little bit risky. So first thing we want to do is make sure that we understand who it is that's actually running these different, crypto exchanges. So with that in mind, there are Coinbase and Kraken in particular. Those are both based out of San Francisco. They're both backed by U.S. investment firms. So and in some cases, they're actually even, they have investment from some big banks. So both of those, I think, are um, probably safer options. And as you kind of get deeper down into the list, you might get some more, more sort of exotic kinds of cryptocurrencies and more interesting things to trade. But you don't always necessarily know who it is behind that trading platform and just how much you might be putting your cryptocurrency at risk. And in the past, something that has happened that everybody always needs to keep in mind is an exchange. And one of the biggest ones was Mt. Gox. Actually went down. It was hacked, and a lot of people lost millions of dollars worth of cryptocurrency. So you do not want to be one of those cautionary tales. Um, you want to sort of get in, get out, make your trades, and make sure that you're protected. So it's a big thing that we're going to keep in mind is just watching out for your own safety. Um, so once we kind of get past the basics here, there are still a lot of differentiators between these different kinds of services. A big one is going to be fees, right? So in general, you're going to pay higher fees if you're able to trade, government issued currency, so dollars and euros, that sort of thing, uh, for um, for these cryptocurrencies. So somebody like Coinbase is not necessarily going to be cheap. They are going to, charge you a fee, but it's fast. It's pretty simple, and frankly, it's rare. That was always, in the beginning of cryptocurrency, it was difficult to find anyone willing to actually take dollars. It was very difficult to go back and forth between fiat currency and these cryptocurrencies. So the fact that a company like Coinbase even exists, the fact that it takes dollars, it's probably worth paying a little extra for. Um, that said, once you get in here, a lot of these exchanges will have much lower fees, and if you are sort of getting deep in the weeds and trading, altcoins for altcoins or Ethereum for altcoins, uh, at that point you may want to shift to, an exchange that does have a lower fee, some lower rates, and just a deeper bench of interesting cryptocurrencies. Another thing to think about is the geographic footprint. In in each of these, particularly if you're U.S. based, it makes a lot of sense to actually use a exchange that's based in the U.S. If you live in New York, you might have some trouble. There's been a lot of litigation happening in New York and regulation that makes it difficult to operate for a lot of cryptocurrency players. The rest of the U.S. less so. Um, if you live in Europe, people tend to prefer Kraken. Um, that tends to play nicer with European regulation. In China, there are a lot of sort of Chinese specific um, exchanges out there. Many of them are actually only in Chinese language. And I've heard stories of people actually learning Chinese in order to get on some of these Chinese exchanges, and actually trade some of these sort of more obscure cryptocurrencies that are limited to the Chinese market, which frankly is much bigger than the U.S. market. Um, so all in all, I mean, there's a lot of things going on here that we need to consider. Um, and then finally, the one of the bigger ones too, and we'll get into this a little bit with shapeshift, is how much information you really want to share with your exchange. Um, you know, Anytime you're dealing with a regulated entity, so somebody like Coinbase, somebody like Kraken, you're going to have to do what's called KYC, or Know Your Customer. And the big issue here is that all of these different companies are on the hook to explain to the US government that they are not doing anything illegal, that they're not allowing people to launder money, that they're not accepting drug money. Um, and frankly, that is part of how cryptocurrency was born. Is there was a certain criminal element, and so a lot of these guys are really going out of their way to ensure that they are sort of playing by the rules of the finance industry, and making sure that they do know their customers. And what that means is that they're going to want, in most cases, a picture of your ID, a picture of your face. They're often going to want your social security number. All of those things, they put together and store as a way of protecting themselves from the US government. So the question then is, are they protecting you from hackers? So, in the case of Shapeshift does not accept fiat currency. You cannot trade U.S. dollars, for Bitcoin. But the cool thing about it is that you don't actually have to set up an account. You can be completely anonymous. You can simply, pull in some Bitcoin or pull in some Ethereum from your anonymous wallet and move it over into the Shapeshift exchange. And once it's in there, you can trade however you like without ever actually having to do much. You don't have to prove who you are. You don't have to expose your social security number. So if you are, let's say, on the paranoid side, I think that's definitely a selling point. So let's actually kind of look at some of these and just kind of talk through what we're looking at. So first off is Coinbase. We like Coinbase. Coinbase is just by far one of the easiest ways to just get up and running. It's got a great reputation. Um, it has, if you can see this here, but it has what's called GDAX. So GDAX is its actual trading platform. We'll kind of look at that really quick. So this is what it looks like. so I'm not signed in. But what you can see here is they offer a few different types of currencies to trade. Obviously, you see a lot of red. It was a down day, and but you'll notice that it's only three, right? So it's Bitcoin, Ether, and Litecoin. Um, and so what we're interested in is getting a little deeper, right? So it's great to be able to trade Bitcoin for Ether, Bitcoin for Litecoin, but you'll notice all of those are down. And so what we want to do is we want to dig a little deeper and find some cryptocurrencies on a day like today, where maybe we can, flip something that's going down for something that's going up. Um, or as we'll get into later, you can also look at short selling, which is another way to great way to make money in a down market. Um, just a few more here. So Kraken, again, it's a good one if you're in Europe. Bittrex, Bittrex we like mostly because it's easy to get up and running very quickly. Um, Shapeshift, again, this one is definitely one of our favorites in terms of just being able to kind of get in and trade some fairly exotic currencies without having to expose too much information about yourself. Um, and then the big one that we're going to use and we're going to talk about a lot today is Poloniex. Poloniex has a pretty deep bench, and we'll show you what that means in just a moment. Okay, here we're looking at Coinbase, and we're just going to go through a simple setup, and just to give you an idea of how easy this is. So it's really not terribly difficult to go through. Just sort of say who you are. My name is Completely. And I'm going to choose a difficult password to remember here. Okay. I'm not a robot, and I'm over 18. Boom. Nice and easy. All right, so I got to do pop over, prove your you, and voila. Pretty much got it. Now, where it gets difficult is actually getting any sort of money in here, right? And so you've got a few different options. So let's just look at this. It's gonna make me add a phone number, which I didn't want to do. But so if I were to add a phone number, that would give me automatic two-factor authentication, which is a good thing. Anytime you've got two-factor authentication, that means that it's going to text you a number that you have to input anytime you want to do this. So I just wanted to show you how easy it is to actually get going with this. So now that you've seen that, I think I'm going to switch over to an account that I do own and just show you some of the more interesting stuff inside it. So this is an actual funded account here in Coinbase. And as you can see on the left here, I've got about $9 worth of Bitcoin, a little over 400 worth of Ethereum, and nothing in my Litecoin or US dollar, right? So if I want to move these around the way you would in any other bank, it's fairly simple to do that. And the cool thing is that once it's in here, it's very easy to go over to GDAX and use their trading tool. So one of the really nice things about Coinbase is that whenever you open an account, they will actually give you this $10 free. So you can see here that I actually got this $10 worth of Bitcoin from Coinbase. So a nice little thank you just for getting started. So let's just kind of go through what it would look like to buy some Litecoin with this Bitcoin that I've got, right? So what I'm going to do is I'm actually going to go over to GDAX to show you that. I think that'll be just a little bit more interesting. So I'll sign in. And so because I'm signed in over in Coinbase, it knows who I am, right? So what I'm going to do is I'm going to deposit my Bitcoin, right, from my Coinbase. So it knows that I've got 0.002355 Bitcoin in there. And I'm just going to take let's do 0.002. So I'll leave a little bit over there, not much. And boom. Okay, so now I've got a little bit of Bitcoin in my, right here, my GDAX account. So now I can actually just get in here and start buying. Okay, so what I'm going to do here is I'm going to make sure that I'm looking at Litecoin and Bitcoin. So I'm going to buy some Litecoin. And so now I'm looking at this Litecoin to Bitcoin chart, and I've got 0.002 Bitcoin in here. So what I want to do is put it all into Litecoin. So here I'm going to place the order. Boom. Notice my balance just transferred. So now I've got 0 Bitcoin in the account, 0.125 Litecoin in the account. And if we go back over to Coinbase, over here in Coinbase now, so again, this is still same account, you'll notice that it shows that I transferred the Bitcoin out to GDAX. But if you look in my Litecoin wallet, there's nothing in there, right? So it took it out of Bitcoin, never put it back to Litecoin. The reason why, if we go back over here to GDAX, so within here, so the Litecoin is still in GDAX. So what I need to do is actually withdraw it. So what I'm going to do is pull all that Litecoin out. So I had like 0.12. And in theory, this should just pop all that Litecoin back out over to Coinbase account. Okay, so back over here in Coinbase. So now we see that we transferred the Litecoin over. And here it is in my wallet. So now I've got some Ethereum, some Litecoin, some Bitcoin, and if I wanted to, I could have US dollars in here just to kind of speed things up. So let's say I thought, I don't know, Bitcoin was going to crash hard. I could theoretically just pull everything out, put it in US dollars, and never have to leave this interface. Or if you just wanted to day trade US dollars for any of these, you could do that pretty simply using GDAX. So we'll save that for later just because that kind of gets into more technical trading. So I think at this point it's a good time to focus on just sort of basic functionality within here. So let's look at, I guess, just moving money around. All right, so jumping over to the Accounts tab in Coinbase, we see all of the different wallets here on the left. And what I want to do is just kind of look at what's going on here. You'll notice that there are two basic buttons here, right? Send and receive. So fairly obvious what they do. If you want to receive money, you would send your public address, either in the form of this QR code or the actual alphanumeric address, to somebody, and then they could send you money. So if anyone wants to send me money, feel free. There it is. Same deal with the Ether wallet, right? So very similar alphanumeric code, and that is public, right? So all of that is actually on the blockchain. So what we're going to do here is we're going to copy this, and I've got another external wallet. So this external wallet is over here at my Ether wallet, and you can see I've got a whopping zero point 0.001 Ether in this wallet, and so this is the other public wallet address. And so what I want to do is paste my Coinbase wallet address in here. So now I've got the two addresses. I've got this external wallet where I've got 0.001 Ether. And what I'm going to do is I'm going to send all of that, which doesn't amount to much after you account for transaction fees, to myself, right? So you can just see how kind of easy this is and how these addresses are what derives transactions from wallet to wallet. And I just want to talk real quick about this gas limit, what that is. They've got a really nice uh, little diagram here. But basically, the way this works is you put your transaction out. It goes into the pool of available transactions, and the more gas, or in this case, the sort of fee, the higher it is, the more likely that people who are running mining software are to pick your transaction and then put it on the blockchain. So what you can do is you can have lower transaction fees, right? So I can go back here and I can say, yeah, I only want to pay like 10. And there's nothing wrong with that. It will probably eventually get done. The problem is that it might take, I don't know, might take a week. Who knows? So what we're going to do, we'll generate this transaction. And here we go. So yes, I think I am sure that I want to move one from the other. All right, cool. So now, another really important thing to think about here is this whole concept of the blockchain. So let's take a look at that next. So with cryptocurrency, everything exists on the blockchain. There's not some sort of, bank running this stuff. It's all public, it's all out there. And anytime that you buy or sell, or just move, cryptocurrency from one wallet to another, what happens is that that's going to get recorded publicly on the blockchain. And so if you go to a website like etherscan.io, what you can do is you can actually see, pretty much anything happening on the block. So as these things come in, we can actually go in and look and say, okay, like this guy here just sent money to this person, and neat. And so it's all out there. It's all public. So what I want to do is I want to put in my little wallet address there. I'm gonna search for it. And so this is the whole record. It's all public of what happened, right? So what it says is that a day and 5 hours ago, I sent myself 0.001 Ether, and today, 3 minutes ago, I sent it out. And what happened is that both times when I did that, I incurred a transaction fee. And what we're talking about here is roughly the dollar equivalent of maybe, I don't know, 15 or 10 cents or something. And so what's happening is that those transaction fees are eating up the amount of Ether available. And normally nobody in their right mind would spend 15 cents to send 15 cents to themselves. But for demonstration purposes, that's what's happening right here. Back over in Coinbase now, you can look at our recent activity, and you'll notice that here it is, right? So it's this incoming Ethereum coming back, and you'll notice that it's still pending. And what that means is that this transaction is still in the pending pool which means that it's out there. It's it exists, but miners have not yet actually added it to the blockchain. Um, so if someone were to send you, Ethereum, in theory they could still potentially reverse it, but if it hasn't been added to the blockchain yet. So what you always want to do is wait for that pending to go away before you consider the transaction final. But again, you can see here. So I sent myself 46 cents, 30 cents of which actually made that to the other wallet after transaction fees were taken out, and then got back 15 cents, which means that they took another 15 cents in transaction fees on the way in. And again, because this is a decentralized system, you're literally just paying random people all over the world who are running the Ethereum code base to do these transactions for you. There's no bank getting the fee. It truly is just a this decentralized system where miners are getting these monies. Yeah, so that's kind of the basics of how to send it back and forth. But let's just jump over and do one more. So go back to accounts here. So back over here in the accounts tab, so we've got our wallets again. And so this time, instead of worrying about receiving it, show you what happens when we go to send it, right? So in the same way that we entered, the Ether wallet address, in this case, we would want a valid Bitcoin address. You got to remember that they're not interoperable. An Ether wallet address isn't going to work for a Bitcoin address because it's all about the blockchain, right? Ether blockchain and the Bitcoin blockchain have nothing to do with each other. So if you wanted to add an address here, you would actually need somebody's Bitcoin address, not just some random address. So make sure that sinks in. The other thing that's cool here, though, is you can also just send it to an email address. So if you wanted to, you could just email yourself or email a friend some Bitcoin, and just do it that way. So fairly simple to send off your cryptocurrency here using Coinbase's built-in tools. It's not very complicated. It's certainly easier than that My Ether wallet program that I showed you just a moment ago. Now that you've got a pretty good handle on what cryptocurrency is and how to move it around and just sort of the basics of functioning with cryptocurrency, I want to get more into the technical trading side and actually look at some of these trading tools and explain what it is you're looking at and how they work and just what some basic trading strategies are. So if you're someone who's been, for example, trading Forex for a while, or you've day traded in the stock market, a lot of this might feel kind of entry level for you. But if you are someone who has not actively been day trading and is new to this, I think you're going to find this very useful. So what we're looking at here, so we're back in GDAX, and this is a pretty simple chart here. So it's Bitcoin to the US dollar. And what we're seeing here is we're seeing all the fluctuation in Bitcoin price over the last few weeks. So this is simply, a line that follows the price, pretty basic. And then on the bottom, we've got volume. So you'll notice that, the red means that there's a big sell-off. The green means that there's a big buyback. And so you're seeing this constant back and forth, right, of buying and selling. And, the bigger the dip, the bigger the spike, the bigger the volume that accompanies it. So as a buy and hold investor, you want to see this line going up. So it might be a little distressing to see this coming down over the last few days. However, if you intend to day trade, it really doesn't matter whether it goes up or down. What you care about is just that it's moving. So simply put, if you want to make money on the market going up, you just buy low, sell high. If you want to make money on the market going down, you short sell. And I'll get into kind of what that looks like in a minute, as well as some ways to predict trends and some ways to protect yourself as you're day trading. So uh, let's first do something that helps a lot, which is to switch over to what's called a candle or candlestick chart. Now, what this is going to show you is um, basically just the ups and downs broken in to I think these are I guess 1 day um, 1 day periods, but we can break that down even further. So let's look at 15 minutes. So this tells us a lot of information, right? So generally speaking, when this thin line here uh, extends below the thick line, what that's saying is that the asking price is below the buying price. On the other hand, when this thin line is sticking up above, what that says is that the asking price is higher than the buy price. So both of those are indicators of basically movement and changes in the trend. Whereas on the other hand, you've got some of these where you've essentially got kind of stick coming out of both ends. Usually that means that it's going to remain fairly steady. It's just the trend is going to stay true to what it's been doing. So these are not infallible, but what they are indicators. So the indicators that the trend is moving, and as day traders, that's something we definitely want to pay attention to. So let's kind of get into this and look at how we might actually make some money on this. So one of the issues here is, there's not a whole lot of stuff to buy on GDAX, realistically. I mean, you've only got technically you've got what, 6 currencies? You've got, dollars, pounds, euros, Bitcoin, Ether, and Litecoin. So, 6 possible, currencies with which to trade back and forth. So there's not a huge amount of variety, but let's say, you just want to focus on Bitcoin. So all you're doing is just dollars to Bitcoin, Bitcoin to dollars. So right now, this is probably not, the best time in the world to be day trading Bitcoin, assuming it's going to go up. But let me just show you kind of how that would work. So you got your basic market order, which is just market, buy, put in your amount. But let's say you look at this and you say, okay, Bitcoin dipped down here to, I don't know, around 3,700 bucks. So what I want to do is I want to buy in maybe at like 3,800. I think 3,800 is going to be at the low end of this. So what I'm going to do is I'm going to do what's called a limit. And I'm going to say I want to buy, I don't know, let's say 0.5 Bitcoin at a limit price of 3,800. So what that does is it waits, right? If I were to place that buy order, it would wait for the price to come down to 3,800. And if it came down to that price at that point, I would automatically buy it. So I don't have to watch it. I don't have to do anything. It just works. And in theory, I would expect that Bitcoin would come back up, as it's done quite a bit in the past, and I'd make a bunch of money. So let's look at the next one. So stop. So stops work pretty much the same as limits. There's just one major difference between the two. With a limit, basically you're saying that that is the absolute highest price you're willing to pay. And if the stock changes, if it fluctuates, and it goes up above your limit, you're not going to pay it. So right now, if it's at 39.07, you are not going to pay 39.08, right? That's it. That's your limit. With stop, it works a little bit different. So if I were to enter a stop price, so let's say I owned, a bunch of Bitcoin and I wanted to sell it, but I want to sell it at 4,000. So what I would do is I would put it in here as like a 4,000 stop price. And what that does is that then triggers a sell if and when the price hits 4,000 bucks. The issue though is that the price changes really fast. So it's entirely possible that, the price could go up to 4,005, in which case I'd make a little extra. It's also possible that it could go back down and go down to, let's say, 3,900. So in that case, if I'm worried about it backsliding, if I really am firm on that price, I would want to put a limit. So, I might put like 39.99, right? So that's the lowest I'm willing to go if I'm selling it. So buying it kind of works the same way, right? Where you're saying, so in this case, right now it's 3,900 bucks. So at 3,900 bucks, if it drops to that, buy it. But if it, you can also put a limit on, and you can say, let's say it dips down to 3,900 and triggers a buy, but the most you're willing to pay is 3,901. You're not going to pay more than that. So in that case, you might want to do a combination of stop and limit. And that it's essentially a way to protect yourself. So I think hopefully that's a pretty simple explanation for how all this works. And so given that, let's actually move on to a slightly more complex trading tool, and one that lists a lot more stuff than you can find here. So we're going to move over to Poloniex, and you'll notice right away, there's way more stuff going on here. I mean, Poloniex just has tons and tons of different kinds of coins. And it's kind of a rough day for Bitcoin today as I'm doing this, but you look at Einsteinium is is at 47.67. I mean, there's quite a bit of action here. Monero is doing really good, so I want to kind of focus on Monero just because I think this chart gives us some interesting stuff to look at. This might look a little insane for most people. That is, I don't think, uncommon. What I'm going to do is I'm just going to kind of dissect this chart and explain to you what we're looking at here. So by clicking this, I can kind of take everything off and just give you the bare bones, right? So this should look a lot like that GDAX chart where we've got, our candlesticks. We know that basically when things are sticking down, that's probably a sign it's going to go down. Things are sticking up, or sorry, the reverse, and that's probably a sign of going up, a sign of going down. So we can kind of read this chart. We can see our volume. We can see the overall, against time. So all of the familiar stuff from GDAX is in there, but let's actually make it a little more complicated. So let's add to this the average, right? So this is our moving average. So what this does is just sort of smooths out the trend line and shows us, okay, like kind of over here we're below average, so this is probably a good time to buy. And as we're getting over here, we're above average, so maybe a good time to sell. Obviously, there's if you bought down here and sold up here, you would have made a ton of money. And sure enough, you can probably predict some of this, but a big part of the way you can do that is by looking at what's called the Bollinger Band. And so the Bollinger Band just gives us an area that's 2 standard deviations outside this average. And any technical trader is going to say that when trading dips below this bottom Bollinger Band, that's a really strong buy signal, right? That just says that um, something's up for whatever reason. It's undervalued in this moment, and it's probably going to snap back up. Same thing on the other side. When the sort of trading action comes up and above outside this upper Bollinger Band, that's a pretty strong signal that uh, probably time to sell, or at the very least hold on to it because it's probably going to come back down. Um, and sure enough, I mean, you look at it right now, it's actually kind of doing that. So um, now is probably not the best time to buy a bunch of Monero. And time will tell. We'll find out. But um, if we add some more, right? So this is the exponential moving average. So what this does is it's very similar to the simple moving average. The difference though is that this exponential moving average gives greater weight to earlier time periods. So with a simple moving average, so it's using 50 time periods. With this one, it's using 30, but it's more heavily weighting recent time periods, and this one's even more heavily weighting recent time periods. So it's 2 times versus 1 time. And then finally, you've got it's called Fibonacci levels. Um, this is probably a little more complex than you need to worry about, but basically what this is showing is when you have very big changes, they can kind of help you predict market corrections, market crashes. Wouldn't worry too much about that right now. So let's just stick with sort of these Bollinger Bands and our candlesticks. And I think that alone can give us a pretty good indication of when to buy, when to sell. Let's kind of cruise down here. So again, we've got sort of all of our real-time sell orders and buy orders. But what is actually a little bit more interesting, I think, is what's called market depth. And so what market depth does is it's going to show you all of the buy orders, right, and at what price they are. And then it's going to show you all of the sell orders and what price they are. And generally speaking, if the buy orders outweigh the sell orders, you've got a pretty bullish market on your hands. So let's change to something that kind of went down today. So let's maybe look at Vcash and look at this market depth. So notice with Vcash, the sell orders pretty vastly outweigh the buy orders. But the sell orders tend to be kind of further down, right? So people are not panicking yet, right? The panic kind of starts, I don't know, maybe around here. Whereas these buy orders, I mean, this is a pretty steep one right there. So this is kind of an interesting one. So what this says is that, maybe not the best time to get into the Vcash, but Monero, overall seems like a pretty good buy, but maybe just wait for it to come down a little bit closer to the moving average. So in this case, this would be a great option to put in, one of these limits, right? So in this case, maybe we put in, I don't know, put in our limit amount, hit a buy. Seems like a good idea. But yeah, so you've kind of got, kind of your basic trading tools, all your information. It's not rocket science, I mean, and really what it does come down to is picking the right times to buy and sell, and just kind of keeping an eye on what's going on. Looking at Einsteinium, I mean, clearly there's some pretty crazy action there. So that's crazy. So it'd be really interesting to actually see what went on. Maybe do some searches online to see why did that pop. Do we think this is real? Do we think that it's, this thing's really going to keep up this trend? Or was this just kind of a one-off? And maybe we might even want to short it. the only way to do that is kind of do your homework and look at the message boards and understand why something changed. Um, so that's a kind of a whole other art, is to look into each of these different coins, each of these different tokens, and say, okay, why is something happening? Um, so one that I've kind of been following is this Omise Go. So it's a little bit down today, but you'll notice that um, this is kind of a good place to maybe invest. Um, it's this trend line is sort of starting to smooth out, um, and I think it'd be probably a good idea to put in a limit buy kind of right around here, right around the trend line. Just kind of wait for it to hit that, maybe a little bit below, um, and at that point, probably a good little earner. Um, but I want you to notice something. So you see, there's all these different coins that you can buy with Bitcoin. But when you pop over here to the US dollar, a lot of this goes away, right? So that OMG coin that we were just looking at, that doesn't exist over here in the dollar. So you actually can't, at least on this exchange, probably not on any, directly trade dollars for OMG. You can do it with Bitcoin. You can do it with Ether. And if you go over here to Monero, again, notice Monero doesn't have it. So hopefully at this point, you've got the basics down of kind of what we're looking at, what we're looking for, what's available to trade over here, kind of what some of these indicators are showing you, which direction basically the market seems to think it's going to go. So that's it. I want to sort of just investigate a few other things. And so the first thing I want to just talk about is margin trading. And, the thing with margin trading is everybody always thinks about it as a way to basically borrow money to amplify what they're doing, right? So, if you have a margin account, you can borrow money and you can say, I think it's going to go up, so I'm going to double my investment using my margin account, borrow money, and instead of making $5 on an increase, I'm going to make $10 on that increase, and sort of do it that way. That's valid, but what I think is a far more interesting use of margin trading is the short selling. And if you are going to short sell, you will need a margin account. And I'll just give you kind of a quick overview of sort of what short selling is. But to do that, I'm going to use a different tool just because it's a little bit easier to show using that. So what we're looking at here is it's actually a trading tool for Schwab, which is traditional brokerage, and I've loaded it with this symbol for GBTC. And what that is this Bitcoin investment fund. And what that is it's essentially a Bitcoin index. And so on days when Bitcoin is going down, GBTC also goes down. And a really great way to make money when Bitcoin is going down, in this case today it dropped 19%, is to short sell. So all I have to do is come into this tool, you do a short sell, and so just to kind of demonstrate sort of how this works, right, so let's say you want to buy, I don't know, so 100 units of GBTC, and you can set your stop loss and your profit exit anywhere you want, right? So you'll notice that as I increase my profit exit to a greater percent, so let's say, so I got it up here to crank it up to 10%, you'll notice that the price keeps dropping, right? So it does the exact opposite of what you would expect if I were to do a buy. So when I do a buy, if I have a profit exit of 10%, you know, it's totally different, right? So the lower prices on the bottom is the stop loss, higher prices on the top. As soon as they go short, it flips, right? So now the lower prices on top, higher prices on the bottom. So what does this mean? Like, why is this happening? So the way a short sell works is somebody out there uh, is sitting on GBTC as sort of a buy and hold strategy, and they've agreed to lend it to short sellers like myself, um, uh, who want to try and make money on a down market. And so when you do a normal buy, you're simply buying from a seller and you now own the thing, right? Uh, Buy low, sell high. With short selling, you kind of flip that equation. So you borrow the thing and you you sell it on behalf of that person, right? And so you now owe that person some money. And assuming you sold it, let's say for 566, and then it goes down to 508, you now get the difference, right? So that's 10%. So you got about $50 per share. You bought 100 of those. Do the math. $5,000 pretty quickly. So there's your profit. And the idea is that then once you sell it, or I'm sorry, once you buy it again at 508, so now you've taken back the shares and you return them to the person you borrowed them from. So they now have their shares, they're whole, and you get to keep the difference. Hopefully that makes sense. It's a little bit tricky, but that's how it works. And these brackets, again, with some of these more advanced trading tools, they do allow you to actually do your sort of buy and sell at the exact same time. So you can buy and then also put in your orders for when you want to sell, right? So all three orders go in simultaneously. One to sort of start the transaction, one to indicate what your sort of profit exit is. So how much profit you want, and if it's going to sell then, and then another sort of stop loss to say, okay, this is how much I'm willing to accept as a loss. And so if you do it right, it's fairly simple to consistently make money. The question is just, are you doing it right? Are you actually timing these things? So, looking at a trend like this, I mean, this is a very obvious downward trend. It's easy to short this. Where it gets more confusing is, for things that are a bit trickier, right? Where it's a bit flatter. You're just not quite sure which direction it's going to go. But man, with movement like this, it's hard not to make money. Going back over to Poloniex, we're going to look at the final piece of this here, which is lending. So this is kind of the flip side to margin. This is where the actual, uh, where all the assets come from that you're borrowing, right? So let's say you're somebody that wants to buy a bunch of Bitcoin and just sit on it for 2 or 3 years, hoping that in that time Bitcoin will be up around 10 or 20,000 bucks per coin, and you get to retire to your private island and laugh at the rest of us from the deck of your yacht. So if you're one of those people, what you might want to do is actually lend your Bitcoin while it's sitting there, right? So that way you're kind of hedging your bets and actually earning money on your Bitcoin as it's sitting there appreciating over time. So in that case, you would just come to something like this, where you've got a lending option, and you can put in the rate that you're asking for. You can kind of see what generally what people are asking. The higher you put your rate, the less likely you are to actually get anyone taking you up on it. The lower you put your rate, the more likely you are, so you'll get a little bit more action. You can put as much or as little Bitcoin in as you want, and you can change your duration. So if you truly are in set it and forget it mode, you can crank this up to a month if you want. Um, if you, are kind of like, well, if the market starts to go down, I want to pull out my Bitcoin. In that case, you might want to keep it lower 1 or 2 days to make sure that that you can access it if you need to. Um, and then you can just hit this auto renew if you want to kind of keep it going over and over and over. And what that's going to do is it's just going to kind of slowly over time, just keep accruing interest, and frankly, that's a lot better than you're going to get at your local bank. Pretty cool option. So that about sums it up. So you've now sort of gone through everything from you know simply how to to pick an exchange, how to buy some cryptocurrency using dollars on a site like Coinbase, how to move that money from wallet to wallet, how to load it into an exchange, how to do some technical trading, and even how to do some margin and lending. So that is a pretty rounded education, and I hope that, I hope you get rich. Good luck.